Hello everybody, Steve Griffiths here, developer of the MT Predictor software program. If you could all just let me know whether you can hear me and whether you can see our risk disclaimer with MT Predictor, excuse me, in the background there. While you do that, I just want to remind you that all examples in this training room should be considered as hypothetical. No trades are actually taken, excuse me, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly, accept. That's the important point. Accept that losses can and will and do unfold. Doesn't matter what trading approach we take, there always will be losing trades. Right, today I'd like to have a look at which pivots to place the DPs off, because I know this is an important part of MT Predictor. But first, I'd just like to welcome any new customers to our software, and just remind you that if I go down to a shorter time frame, just remind you that when you look to take trade setups, we're not a black box system. In other words, we don't just take 100% of the trades, automatic trades on the chart, perhaps in the direction of our MTP trend color, and that's it. That's not what MT Predictor is. It's far, far more than that. We're not just a simple black box system with a few automatic setups. And I want to show you how to use MT Predictor to get the most out of it. Just give it a bit more space. For you guys who didn't know, but in our standalone version, you can actually decide what happens to this scanner here. Because when the scanner opens, it comes in a tab on the right-hand side here. Do you see that little pin there? If I click on that, it auto hides it. So it gives you a bit more space. So when you hover the mouse over there, it then just pops up just like that. Do you see that? It just pops up quite nicely. So it just hovers over, which is quite nice as a little tip there. Right. So, well, why do we filter the trades in MT Predictor? In other words, why isn't it just the black box system? Well, I've been in the markets now for what, 34 years, and I sort of learned very early on that markets went through cycles, and that you had times when you had very clear patterns, and you had times where everything doesn't seem to be working at all. And it was the struggling through that I developed my unique isolation approach to Elliott Wave. In other words, rather than looking at Elliott Wave patterns, excuse me, where you look at 100% of the chart, which is the way it's traditionally taught, I realized that basically half the time the markets are random. So in other words, half the time you shouldn't be doing any kind of trading at all or any kind of Elliott Wave pattern at all. You should only be looking at the chart when the pattern's clear. To me, that made perfect sense, but still to this day, how many years later now, I still don't see anyone else teaching this. So it's quite unique. So of course, the question you're all going to ask is, okay, that's great, Steve. Markets random half the time. Markets clear patterns half the time, but how do we know? How do we know when to look at when the market pattern is clear? For that, we go to the higher time frame chart. So if you're on a 3-minute chart, this is a 24-hour chart of the NQ. So if you're on a 3-minute chart, you'd go out to the 15-minute. So we're looking at time frames between 3 and 5 time frames higher. So a 3-minute chart, the next logical time frame up is the 15-minute. If you're looking at an hourly chart that we'll look at in Forex a bit later in the webinar, you'd go out to a 4-hour. If you're, say, looking at a 4-hour chart, you'd probably go out to the 8-hour, or probably more likely you'd go out to look at the daily. If you're trading stocks on a daily chart, you'd move out to the weekly. So you'd go to the next logical time frame higher. Now for this, we then place our DPs on our chart. Now I'll just do a quick example of this before I get into exactly which pivots to use. Because here you can see we had a previous pivot. I'll go into why that's important in a bit. I'll just right mouse click here, decision point. But actually what I'll do is I'll just use our training mode, okay? Because this is the important part of MT Predictor in that these are the levels are on the chart in advance. So if I take a DP off this pivot, can you see how it's on the chart in advance? Do you see that? We're not looking at a scanner where you react to a setup that comes in. We're looking for a level on our chart in advance. In other words, you're working ahead of the market. You're preparing in advance. So what we're saying is, go on market, what are you going to do at this level? I'm not projecting it's going to get there, but what I'm saying is if it gets there, let's see what it does. If I turn training mode off, can you see what it did here? It went up to that level. It then made a reversal and started to come down. Now, I'm not looking at the MTP trend color on this time frame, okay, because we're just placing the DPs on the higher time frame. So can you see how the market answered the question we asked of it? In other words, we're saying, are you going to reverse at this level? It turned around and said, yes, market trend is starting to go down. So when you then come down to the shorter time frame, can you see how now there's your higher time frame resistance? Can you see how now it makes sense to looking for short trades? Because that's the higher time frame resistance. Therefore, the market trend is now down. Therefore, it makes sense to look for sell setups. We can also then come to our MTP trend. Notice how I come to this second. I don't come to this first, I come to this second. We look for our MTP trend to be in agreement with that. As you can see here, it then turned red, stroke grey, stroke red. There's no blue here. So can you see now it made sense to look for the sell setups, and not the buy setups. See that? All the buy setups there didn't really work, did they? But the sell setups were the ones that worked nicely. Now, obviously, they don't always work like that because that's why you have stops in there. That's where you have losses. But can you see the basic concept of what we're looking to try to do? Is we're looking to try and project in advance on the higher time frame, ask the question of the market, then come down to your shorter time frame, then look for trades that are in that direction. Now that's great because I've chosen an example here where the market reversed off that high beautifully. So in other words, the picture's clear. What happens if you then go to a market, let's go to the ES, where the picture's not clear? So here, now if you guys have been with us for a while, I'm just going to use the typical DP. I'm not going to go to the maximum because I'm not going to confuse the new people among us because I know that will have reversed at the maximum. But here, can you see how it went beyond this level and then it didn't really reverse at it? So in other words, there, the picture's not clear. If we go to the YM, here's a similar kind of thing. If we take the DP off that major high, can you see how it didn't reach that level? In other words, it didn't get to that level. It then reversed. You didn't quite know what was going on. It almost looked like the market trend was still up. So in this case, the picture's not clear. So this is why I say we only work when the picture's clear. So in these examples, you wouldn't be looking for short trades on the YM. You wouldn't be looking for short trades on the ES, but you would be looking for short trades on the NQ. So can you see the logic behind this? In other words, we're only looking to trade when the picture's clear. And this is quite a hard concept. I find people to get their head around because people want to be able to trade on everything all the time. So you have to get out of that mentality and you have to get to the idea of thinking is that I only really want to trade when the picture's clear. So is that, can you understand? Can you all understand that? Why we're trying to do that? Why we're trying to only look to then start to look for trade setups when the higher time frame picture is clear. Now, this is very important because it means that you should only be looking for trades when you get a clear picture. And when you don't, which you won't quite a lot of the time, then you should be standing aside. This is a basic concept of MT prediction. If you get your head around this, it will keep you out of lots of losing trades. It does mean you've got to sit and wait sometimes, but to me, it says, why on earth would you want to try and take trades when the picture's not clear? To me, it makes perfect sense. You only want to trade when you have a clear picture. So that's all well and good, but how do you decide which pivot to take the DP off? Because if I look at the chart there looks like there's an awful lot of swings up there. So which ones do you use? Now, this is why we do this training. We actually want to show you now which pivots to use. The general guidelines are quite simple, in other words, quite straightforward. There's not many general rules to do this. I'm just going to jump back into here somewhere. Right, the first pivot to use. If you have a market that's retracing back against a new high, do you see that? The market made a new high here. The market's retracing back. If the market's retracing back against a new swing pivot high or low, if it's obviously going in the opposite direction, but a new pivot extreme, see there's the pivot extreme, the market's retracing back from that, we then take the last swing into the high or low. Okay, so in other words, we take this last swing. Do you see that? That is the last swing into that high. So we come back to this pivot here. We come back to this pivot, right mouse click, do DP. That then gives you an area of support. If you're using TradingView, we'll have a look in a minute. You have to use the parameters to define which pivot to use, and I'll show you that quickly a bit later in the webinar. But you see the first one to use, the first one, and this is very important because this happens so many times, and for you guys who've been with us for any length of time will see me use this again and again and again. The last swing into the high or low. This is why we can't place a DP off this last pivot here. So if you right mouse click here, do DP, nothing will happen. You can't place a DP off the last pivot because you haven't got a swing from it. In other words, the last place you can place a DP off is one pivot back. So don't try and take it off the last pivot. It just won't work. It's not designed to. Right, so that's the first place to look for support. Okay. If I go forward, market should start to decline fairly soon. There it is, it started to decline. Okay. Do you see how now it's gone through the DP? Okay. So I've deliberately chosen this example because I want to show an example of if this level doesn't hold, then where is the next pivot to use? Okay, because I'm just giving you the guidelines. The first one to use is the last swing into the high low. If that's exceeded, and we define exceeded as 2 consecutive closes, which we had here, 1, 2, 2 consecutive closes beyond the DP, we then define it, I won't say failed, but we'll call it exceeded. In other words, it's gone through that. Where do we then go back to? We then scroll the chart out a bit, and we then go back to the previous main swing high or low. See, if you look at this whole of this chart here, can you see how this pivot I'm circling here is fairly obviously the last main pivot low? Can you see that? Because this one is below this one. All these little ones in here are irrelevant because this is the last major swing high or low. So we go back from this pivot, we go back to the last major swing pivot high or low, which is this one here. Again, we right mouse click, we do DP. Can you see again how it's on the chart in advance? Okay, you got that? So we use the last swing into the high or low. If that's exceeded, we then go to the previous main swing pivot high or low, which is here. That's the next place to do the DP from. If we scroll forward, just look what the NQ did. It came down into there and just look what happened. It then made that low absolutely perfectly. So isn't that nice to know on that sharp fall there, that area of potential support? And again, do you see how it's on the chart in advance? So that was there ready for you as a potential area of support. Now, they don't all work that well. As we've seen on the ES and YM earlier, there will be times when the chart doesn't work. When it doesn't work, we deem the picture's not clear. When it's not clear, we look for either wait or we look for a market time frame where the picture is clear. It really is as simple as that. As the market's starting to retrace back up here, which pivot do we use? Let's get those out of the way a bit. Well, here we use the last swing into the high or low. So there you go. That's the low, isn't it? So this here is what I'm looking at here. This is the last swing into the low, isn't it? Simple as that. So this pivot here is the pivot we use. Right mouse click, do decision point. Again, do you see how that's on the chart in advance? That gives you an area of resistance as the market's going up to it. If I turn trading mode off, what has the NQ done? Well, it's gone right up to that level and it's now starting to decline back off that. So you can see how powerful these DPs are when they work. Okay, now this is the thing you need to be really clear about, is that it's not a case of we're saying that it's going to work all the time. We're saying only work with it when it's working. In other words, when the picture's clear. When the market is making the reversal at these levels, then that's the time to work with it. And of course, that was the DP we looked at earlier. Remember, I said that I'd tell you why that pivot was the one I chose earlier. Well, that pivot was the one I chose earlier because it was the last swing into that low. So of course, now when you come down to the shorter time frame, now can you see why it makes sense to then take your short trades on that shorter time frame chart off that higher time frame resistance. So that's the first general guideline of when a market is retracing back against a previous swing. So you take the last swing into the higher low. If that's exceeded, you then go back to the main or the previous main swing pivot higher low. So that's like two guidelines. Not a lot to learn, is it? Just two. So what happens now if a market is going in the same direction? So what I'll do here is I'll go back to this. You see here, the market is now declining down in the same direction. If it's going in the same direction, we then use the last swing in that direction. So in other words, as it starts to decline down, the last swing in that same direction would be this pivot low, wouldn't it? As it going down, that would be the last swing in that direction. So here, you'd right mouse click, do a decision point. That gives you an area of potential support. If we turn training mode off, can you see how now we've actually gone beyond that? So that would be an area where we'd look for support. So if we're on the shorter time frame, we'd be looking for support around here. They didn't come in very well. So in this case, we wouldn't be looking for any trades because this particular DP didn't work that well. And I think it's important to show examples that don't work because this is what you'll come across in your own trading. But you see the principle that we're looking for in that when it's going with you in the same direction, you go back just to the previous pivot higher low. And of course, now it's exceeded that low. Where's the next support? Well, the next support is, there's the last swing into that high. The next support level would be off here, right the way down here. So now we can say the large degree trend is still down until if we get some more, if there's some more swings up here, if it say traces back up, then starts to go back down again, then you'd take a DP off what would be the new pivot low. So do you all see the basically the three guidelines, if you like, of which pivots to take? You take the last swing into the higher low. If that's exceeded, you go back to the previous main pivot higher low. If the market is going in your direction, in other words, it's going with you in the same trend direction, you just simply take the last pivot higher low. So that's the three guidelines that we use for choosing the pivots to take. As you can see, it's not complicated. It's not a lot to learn. It's not a lot to do, but that's what we basically choose. They're the pivots we basically choose. And then you work with whether the market is making a reversal off those levels. Does that make sense to everyone? And are you clear on which pivots to use? And more importantly, are you clear on why we don't use every pivot? Why we use just the important ones? And that's why we don't use the MTP trend, because basically we've only calculated that using all the previous pivots. It would be nice if we could work out an algorithm to work off the three guidelines that I've talked about, and perhaps I might have a chat with the programmer. We might have another go at this, but it's incredibly difficult to try and program that. It would be great if we could get an algorithm to do that, but sometimes it's quite difficult to code a quite complicated algorithm like that, where actually sometimes just using your eye is actually really quite easy. The human eye is so good. It's so good at just being able to see the pivot swings. It really is. Whereas trying to get a computer to see those swing pivots is actually very complicated. To try and code all the different possibilities, all the edge cases, it is actually very, very, very difficult. I know loads of people in the last 20 years at MT Predictive going have just like a whim said, well, if you can say it, you can program it. It's not that easy. Take my word for it. So that's why we go over in detail using the DPs on the chart by eye. So let's have a look at a couple of other examples. Let's go to some Forex charts. Let's sort of look at the British pound here. So you can see the British pound is declining a bit. So where did it decline off? Well, that's the last swing into the low, isn't it? That's the low there. So this is the last swing to the low, just as we've seen before. So if I just use the trading mode again, just to show you how, these are on the chart in advance. This is an important thing to understand. So there's the last swing into the low. So this would be an area of potential resistance. There it is up on there in the chart in advance. If I turn trading mode off, look what the pound's done, up into that level, and now it's declining off it. So here we deem the picture's clear. It's clear on the daily chart. So if we went down to, say, the 4-hourly chart, now we'll be looking for sell setups in that down direction, in that short direction. Now, it's a bit frustrating that we didn't have any setups, and this happens sometimes. Again, the good, the bad, and the ugly, as I've talked about, is that sometimes you can catch the higher time frame support and resistance level beautifully, and then you don't get any setups on the shorter time frame. That's just trading. This is what happens sometimes. There's so many books and so many examples by other software gurus and software vendors, in that they only give idealized examples. And for any of you guys who have been around for any period of time will know that the market is not always ideal all the time. The reason being is because it goes through random phases. So this will be one of those times where, even though you've got a clear, larger degree trend down, there aren't any setups because the picture's unclear. It's just random. And this is what markets do sometimes. This is just the fact of life. Let's have a look at a slightly shorter time frame. Here's an example on the Australian dollar, Japanese yen. I'm using a reasonably good example here just to show you exactly the kind of things we're doing here. So in this example, I'm just going to go back a bit before that previous high. The market here is going up, isn't it? It's going up. So you want to take the DP from the last previous pivot high. So in other words, the DP in the same direction as it's going. In other words, it's going up. So you go back to the last pivot high, which is here. Right mouse click, do decision point. That'd be an area of potential resistance. If I turn trading mode off, can you see how it went up to that level very nicely and put a reversal in? By the way, if it exceeded that, you'd probably gone back to the last major pivot high, which probably would have been there, and that would have probably been the next area of resistance. But you didn't need to, because it made the reversal at that level. This is on the 4-hourly chart. So if you're looking to then use that as the higher time frame, if you then come down to the 1-hourly chart, you'd then be looking for trade setups on this shorter time frame. So can you see here now, we've got a VS sell, which is a volume spike. Again, I'm not going to cover exactly what the trade setup's about. There are recorded webinars that show you exactly what these are. We've talked about these in previous webinars. But can you see here how we got a setup at the higher time frame? The shorter time frame setup at the higher time frame resistance. Our MTP trend was in agreement because it had gone grey. That shows it's in the process of making a reversal. Also happened in this case that the large degree trend was down beforehand, but that could have been blue as it gone up. But the main point is the MTP trend was either grey or in the direction you're going. So can you see here now, that would also be a good trade setup to take. So right mouse click over the red sell bar. That would then give you a short trade down into the next target there. But the important point is, do you see how the picture was becoming clear? Because the market was making a reversal at the higher time frame projected support and resistance. So you had your shorter term trade setup, your shorter term trade signal at the higher time frame resistance. And obviously, as the market was starting to decline down here, our MTP trend was red, so you could look for sell setups on the way down as well. Now, here there weren't any because you're already short off the high. But again, you see the premise we're doing. In other words, we are just looking to use the 3 guidelines for placing our DPs on the higher time frame charts. We're then looking for the shorter term trade setups that occur when the picture's clear. In other words, when the market is reversing off those higher time frame support and resistance levels. which it only will do about half the time. In other words, that's what we're looking for, all of this lot in a backdrop of an environment that's only working about 50% of the time, because half the time the markets are random, half the time the markets are clear. And this, I think, is why so many amateur traders fail. I mean, the statistics are horrific. They say something like 97% of amateur traders lose pretty much all their account within 3 months. It's because they just don't really understand what they're getting into, in that they don't really understand that you're in an environment where half the time it's unclear and you shouldn't be doing anything. Half the time it's clear, and that's when you should be a bit more picky about what trades you're taking. It's almost like in physics, if any of you guys have done higher teaching on physics, if you get near a black hole, the laws of physics basically start to degrade and fall apart. So this is the same kind of thing, is that you're working in an environment where 2 + 2 does not equal 4 all the time. So you only want to be working in the environment when 2 + 2 does equal 4. In other words, when the picture's clear. When 2 + 2 equals 5 or 3 or 7 or something else, in other words, when the picture's unclear, why on earth would you want to try and muck around in that kind of environment when, it doesn't seem to be working? And this is, I think, a very hard concept to get your head around. But when I sort of worked this out all these years ago, suddenly trading became a lot more straightforward. I won't say easier, because trading is quite frustrating, as we know, for the psychology of trading. It just became a lot clearer in that, or a lot easier, because you are only looking to trade on the shorter time frame when the higher time frame picture is clear. And when the higher time frame picture is unclear, do nothing, stand aside. So does that make sense to everybody? And can you see how we're looking to do that? Now, obviously, I've chosen some quite good examples here. I mean, markets don't always work this well. Quite often when you go to a chart, you'll get no clear pattern. Like here, the market was going up. That was the last pivot high. It didn't get up to that level. As it's starting to come back down again, this would be the sort of the swing pivot low. We're in that level now. So now you can be looking at, on the shorter time frame, you'd be looking for buy setups. But there are periods, like earlier, when it didn't get to that level and the picture is unclear. So this is, again, what I want to stress is that the charts will be messy half the time. They will be unclear, but it's only looking to work when you get a clear picture. It's interesting, we had a nice VS buy setup there. So if we go and have a look at the 4-hourly chart, was that coming off was this one here coming off a major low? Well, what do? That was the major high, wasn't it? This was the last swing up into the high, wasn't it? Okay. As I've said before, it's one of our guidelines. This is the last swing up into the high. So this would be the pivot there. That would be the pivot to take the DP off. As you can see, it came in, caught the low nicely. So when you're now on the shorter time frame, here we had a VS buy at the higher time frame support. So that's when you could come in, do your analysis, and you could take your trade there. So again, that point, the picture was clear because everything was coming together. Up at these highs here, the picture wasn't clear because the market didn't come to the clear picture. So this is what happens with markets. You'll have times when it's not clear, therefore you should be standing aside. Times when it is, that's when you should be looking to take your trade setups. Like on the Australian dollar, US dollar. So what we'll be using here, because it's quite choppy. Well, fairly obviously here, that's the last major swing pivot low, isn't it? There. Should right mouse click, do DP. That would be our area of support. Can you see now we're just entering this area of support on the 4-hourly chart. So now on the 1-hourly chart, you'll be going down and looking to see whether there are any potential setups coming in. Obviously there aren't yet, but you never know, there might well be a VS buy setup or something a bit later appear if not when, if the Australian dollar, US dollar starts to rally off this level. But can you see how you can start to prepare in advance for support and resistance levels? Just want to pull TradingView into the into here. So I just want to show you that if you're using TradingView, how to place the DP levels on here. Just again, go back to the NQ chart. I'm just going to pull that up again now. I'm just going to go to the 15-minute chart. So say if we wanted to place the DP off this pivot here, you'd have to double click on your decision point script. I then display the pivot labels, and here you can see it's off pivot 54. So I'm going to use the pivot number in the drop down here. I'm going to use the pivot number of 54. I'm then going to tick the box there. That then places the DP on the chart. Can you see how it's now on the chart there? If I want to keep it on the chart, what I do is I tend to place a rectangle around it. I just tend to draw a rectangle to keep it on that same time frame chart. So I just draw a rectangle around it. I then just lock that rectangle. I'll then untick these ones here, untick them, but the rectangle's there. So then now when I come down to the 3-minute chart, the script doesn't recalculate. It then stays on the chart as that rectangle. Do you see that? Therefore, the rectangle stays on there. That gives you the large view trend is down, and there's our sell setups as we saw in our standalone version. Our MTP trend there has gone red as well. So that's what we tend to do in TradingView. And obviously, if you're on the last couple of pivots, the last swing pivots, you can actually do some pivots back. So if I again have a look at this one here, so that's the last swing. 1 pivot back, 2 pivots back, 3 pivots back, 4 pivots back. So here I could use the pivots back and use it for 4 pivots back, then do the DP, and as you can see, it placed it on for you as well. So if you're doing DPs off swings that are closer to the end of the chart, you can just use the pivots back. If you want to place DPs that are further back, then it's probably better to place the pivot labels on and then to use the pivot number like I have here. This is why I tend to use the first section here, because you can place multiple DPs on the chart. The first section I tend to leave as pivots back, and then the second one I tend to leave as pivot number. So if I'm doing a pivot number DP, I'll use DP2. If I'm using a pivots back number, I tend to use the DP1. It's just a little tip if you're using TradingView, just to be able to place the DPs on a little bit quicker. We're hoping one day PineScript in TradingView will get a little bit more intelligent, so we can do the right mouse click off the chart. That would be lovely if TradingView ever code that in. But PineScript at the moment is very young. We'll call it like that. It's very young and very hasn't matured enough to be able to do anywhere near enough as far as coding requirements that we need. So I'm hoping that TradingView will improve their PineScript language as the years go on, and make it better and easier for us. Because TradingView is very good, lots of other ways in that it's a web-based environment, so easy to use on that. You can have it on Macs, you can have it on your iPad, and all that kind of stuff. It's quite a nice platform to use. It's just their Pine scripting language is still a little bit young. So as you can see, that caught the high nicely there. So that's the tip that we use for our TradingView users to be able to place the DPs on and then be able to do the chart as well. I mean, you can do little nice things as well, is that, you know, you can put a label in there as well if you wish. So you just, you know, tidy your chart up a bit. So then when you come down to your 3-minute chart or your shorter time frame chart, depending on what you're looking at, you know, there it is. You just know what that level is. And the reason I lock it is that means that you just can't accidentally grab it and then move it around, because obviously you want to keep that at a specific level. As you can see that the markets have opened now and the markets are starting to decline down. So it'll be interesting to see whether we do get the DPs off these pivot lows here. So we'll have to see what happens if the market does continue to carry on down. I'll just leave it back the way I like it. I have my 3 E-minis side by side like that. Right, just pull that over there. So are there any questions on what I've talked about today? Are there any questions from anyone in particular on which pivots to use? So just to refresh your memory, if a market is retracing back from a pivot extreme, we use the last swing into the higher low. That's what we first use, the last swing into the higher low. If that's exceeded, we then go back to the previous main swing pivot higher low. If a market is going in the same direction, we then use simply the last swing higher low in that same direction. So if it's going down, you use the last pivot low. If it's going up, you use the last pivot high. And that's the three guidelines you really need for using which DPs to use. On that last question, can you drop me an email if you want to get through directly to me, steve@mtpredictor.com, so I could probably answer you better via email, via a webinar environment. The data vendors we have for our standalone program are IQFeed and Barchart. I mean, IQFeed is the main one that we want to use, and TradeStation. So TradeStation is really good because if you've got a TradeStation account, it's effectively free for the markets that TradeStation use, as long as you keep a certain amount of money in your TradeStation account. And if you don't do any trading, I think they charge you $50 a year. So you could effectively have real-time data for $50 a year on the markets that TradeStation cover, as long as you actually fund a small account with them. That's the data feed that I tend to use myself. So if I'm actually because this is a IQFeed, it's exchange delayed here at the moment. But if I open my main workspace that I'm going to do, so I'll just close that one there. I'm just logging into, on a different screen, just logging into the TradeStation data. It's now pulling in the TradeStation data into don't know why it said no data there. It's a bit annoying. And now you can see there's the data coming in there in the TradeStation data. So that's probably the cheapest one for our standalone program. If you're using NinjaTrader, obviously you can have all the data feeds that NinjaTrader have into NinjaTrader, or if you're using TradingView, well, you know, they have real-time data at a cost, which again, if you're using the E-minis, isn't very much at all. So if you're using TradeStation data, it's not TradeStation data, I mean in TradingView, it can be quite cheap. Or if you want to in TradingView here, I've actually connected my TradeStation account. This TradeStation account, I've actually connected this to TradingView, so it uses the TradeStation data in TradingView. So again, that's free, apart from the $50 a year charge if you don't do any trades through them. So you can connect a broker account in TradingView if you wish. So there are lots of different alternatives that you can do depending on what markets and timeframes you like to follow. So hopefully that's answered the question a bit there as well. Right, so are there any other questions that anyone would like to ask? Again, the main thing I really just wanted to cover was exactly which pivots to use for the DPs. So this is being recorded, so you can go back and review which pivots to use. But hopefully it's been helpful as a review of which ones to use. Again, simple answer is the last pivot to the last swing high or low, then the previous last main pivot, or if it's going in the same direction, the next pivot or the previous pivot in the same direction. As simple as that. So that's the pivots to use for our DPs. Right, I don't think there are any other questions coming in, so hopefully everyone's enjoyed today's webinar. If there are any questions that you think about while after the webinar's finished, that sometimes it can happen, you can get to me directly, steve@mtpredictor.com, and ask me an email directly there, and I'll try and answer it again in next week's webinar. But otherwise, have a good trading week, everybody, and hopefully you get some good trade setups. But remember, only trade when the picture's clear, and remember that the markets will be random 50% of the time, and the trick is keeping out of the markets or having the patience to not get involved when the market picture is unclear, having the patience and discipline to wait until the larger picture is clear. But obviously, even when it's clear, you'll have times when there are no trade setups, and you'll have times when trading losses come through as well. That's why we use position sizing to keep the initial risk small and under control. So when the losing trades come through, as they will with any system, the losses are kept small, and over time, hopefully you have profits that are large in relation to the small losses. So have a good trading week, everybody, and we'll be back to do it all again next week.